let's welcome in our management today, and we have Shikhar Aggarwal, Joint Managing Director at BLS International, joining us. Hello, welcome to the show, Mr. Aggarwal. First of all, I want to start off with the big order win in focus, which is there. 2,000 crore is the kind of size that we are looking at. Just give us a brief outlook in terms of this order win that we are seeing for the company.
Yes. So this is a landmark win for BLS International. We have just won a 2,000 crore plus tender from UIDAI, which is setting up of around 300 Aadhaar centers across India, where we will be employing around 3,000 people. So in this contract, this is a 6-year contract. We will be getting an EBITDA margin of around 20%. And I think it's a landmark contract because exclusive centers are being set up by UIDAI, which will be run by us and set up by us.
So what is the kind of revenue visibility one should see from this contract?
So see, revenue is the revenue that we are targeting is around 2,000 crore. We are targeting to do around 1.52 crore applications every year, and 2,000 crore. The scope can be expanded a bit as in when volumes increase. Last year in India, there were around 17 crore Aadhaar transactions that we know of that happened. So I feel this is an exclusive setup that is being run up now. So for now, we are going to set up 300 centers in 1 year time, and then as in when the scaling up happens, we will be increasing the application volume.
Right, sir. But Aadhaar services are already available at various banks, post offices and various other centers as well. So what is it that will drive footfalls to your Seva Kendras?
So this is like, the landmark project of UIDAI. These are exclusive centers being run by Aadhaar Seva Kendras in different districts across the country. So definitely, last year itself, our target, this is a minimum target that we know we will achieve 1.52 crore applications every year. So minimum revenue that will be coming in will be of 2,000 crore that can be expanded further.
Right. Just on that, also want to understand the margin profile. You spoke about 20% or odd, so it's the kind of profile that we should be looking at. But where does that, make the overall blended margins, if you have to get a sense on that, considering because in the first quarter, we've seen strong margins coming for the visa business. So just want to understand the overall picture in terms of margins. How is that going to shape up in FY26 and even after the ramp up in 27, 28 also?
See, if you see the numbers that you delivered in first quarter, we achieved 711 crores of revenue, which was a 44% growth compared to similar quarter last year. And we did a 204 crores of EBITDA, which was around a 50% growth compared to similar quarter last year. So definitely, the margins, if you see, we have achieved around a blended margin of 28, 29% now. And if you talk about visa business, we have done a margin of around 35 to 40% now. So I think this business definitely, the margins are EBITDA margins that we are targeting is around 20%. But if you see, this gives us a big presence within India of setting up exclusive centers. So definitely overall margins will be less blended margins, but we are now doing segment reporting. So the visa business margins will continue to remain strong.
On that, also want to understand the new acquisitions also which have happened over the last course of year and even the ramp up that is expected even in the digital services. We've seen about a 200% or growth. So want to understand what's the kind of contribution that it currently has on the EBITDA right now. And once, there's a ramp up in terms of the new acquisition also, what's the kind of profile that you will have on hand?
See, the e-governance digital business, we also doubled our profitability. If you see last year and this first quarter also, we delivered phenomenal numbers. We acquired a company called Zero Mass and also RD Phyllis Loan Solutions last year. The numbers are going to start coming in fully from this year. So definitely right now we're doing 20 to 25% contribution of the overall business coming from the digital business. As we grow as a company, we expect both big growth coming in from both the segments. So that is why I feel the revenue contribution from the segments will be similar in the long run.
Right, sir. Also, I wanted to understand from you, sir, with the global market share of around 16 to 17% when it comes to the visa outsourcing business, is there more headroom for growth that is left? And are there any specific tenders in Europe and North America that you're most confident about that you would win?
See, on a consolidated level, if you see the market is growing at 14% CAGR, what we see after COVID, and our global market share is around 16 to 17%. If you see in the first quarter itself, we've achieved 180 crores of profit, which is a 50% increase. This is on top of, on the backing of, some of the new contracts that we have won and deployed, some of the acquisitions that we have done, existing contracts we have ramped up. Now there is a big opportunity of, billions of dollars of contracts that are coming up for renewal in Europe and North America American markets where we are a big player, which is qualified for these tenders, and we expect to win certain market share. So that will definitely lead to increase in the market size and our penetration in the market.
Okay. Even in terms of, there have been a couple of new tenders that you were eyeing in the pipeline. Just want to get an overall sense in terms of what's the kind of size that you're seeing across the tenders that you have, and and it's across the new geographies also that you're eyeing out for. So just want to get an presence in terms of international as well. What's the kind of outlook that we have?
See, from last 2, 3 years only, if you see, we've added a lot of new clients like Germany, Italy, Poland, Portugal, Slovakia, where we have won certain global tenders, certain regional tenders. So we have been winning tenders. There's an opportunity of upwards of $1.5 billion worth of tenders that are coming up for renewal in the next 1.5 to 2 years, where we are bidding for, and continuously, as you see, we've been adding newer client governments. We also started working with the US government recently in multiple countries with our partners, General Dynamics. So we are working globally with multiple governments, and the opportunity size is quite big that we are targeting.
Right, so and lastly, just wanted to understand any acquisitions that you have planned for FY26 or you're
See,
planning?
last year itself, we did around 1,200 crore plus acquisition that was done primarily from internal accruals. Now, again, if you see the first quarter numbers, we have again achieved a bank balance of around 1,400 crores. So definitely, we have a big M&A team that is constantly looking at different acquisitions, that can be synergized with us. Last year we acquired iData as well as Citizenship Invest. So that has definitely led to an increase in margins, economies of scale, etc. So we are targeting similar kind of opportunities globally, which can lead to our growth as well as big business opportunities in the near future.
Just a follow-up on that, what are the kind of opportunities that you're seeing, considering that, even if you look at the cash balance, you have about 1,100 crores or also sitting there. So how do you plan to use this, and what's the kind of expected ramp up once, you're eyeing out these new acquisitions which are in place?
So yeah, we have around 1,400 crores of cash even after the acquisition of around 1,200 crore of acquisitions that we did last year. Again, we have generated cash, so we have 1,400 crores of cash on the books as of now. So we are targeting acquisitions, which are in the services domain, outsourcing of government services, exclusive contracts, user pay model, EBITDA margin is good profile, where we can get companies at a healthy multiple, where we can grow, etc. So those are the kind of companies, sizable companies that we are looking at.